Hi everyone. The world's economic landscape has changed significantly post-COVID. We're seeing new forms of increased monetary stimulus, especially from Western countries. Combined with this, we now have renewed speculation as to the future of Bitcoin, blockchain, and DeFi. To discuss all of this, as well as a little bit on Austrian economic theory, I've got the guys from Etherbridge, and we had quite an interesting discussion. Stay tuned. I think you'll enjoy this. Is Bitcoin still relevant to the world? Do you still see Bitcoin leading us into this new future?
Yeah, so I think first of all, there was a lot of work that went into Bitcoin before Bitcoin was birthed, right? So there was at least 30 years of projects that led up to this innovation, right? It wasn't just a fluke, it wasn't just magic internet money. There was a build up to solving the problem of having trustless peer-to-peer money. So is Bitcoin relevant in today's world? Well, we got to answer the question, well, what is Bitcoin? So at Etherbridge, we view Bitcoin as an apolitical monetary system, right? It is a settlement system at its most basic.
Hi guys, and welcome to today's video, where I'm very happy to have two special guests on the show today. We're going to be talking about Bitcoin and Austrian economics. So I've got Jason and Michael from Etherbridge. It's a very exciting company. They're doing exciting things. So without any further ado, let's hand over to Jason and Michael. Let's get a bit of your personal background, guys, and then also a little bit on what Etherbridge is all about and what you guys are doing. Let's maybe start with you, Jason.
Awesome, yeah. So I guess my journey into crypto, I would consider myself a proper crypto native. I had a 1-year stint at a small equity fund called Evolve Fund Management before I came across Bitcoin. And I guess my background is in accounting, so it's a ledger system. It was already quite interesting to me, but what really drove the passion, the obsession for the space was that I did a 4-year finance degree and I realized I knew nothing about money. That's really been the massive driving force, realizing that money and financial plumbing are the two sort of biggest blind spots in finance, and the fact that I literally went to a university to study this stuff. And at no point in time did we ever talk about money's relevance in society. So that's what propelled the sort of obsession. Mike and I have been doing this now since late 2017. It took a very long time to get things off the ground. It's obviously a new nascent space. But yeah, I would say that my background particularly is financial plumbing and accounting. And I am incredibly passionate about what blockchain can do for the world, and I hope to share some of those ideas here today. So, over to you, Mark.
That sounds awesome. Cool. Well, I at the end of 2017 came out of university, wasn't quite sure what I wanted to do. Jason, as you said, had been working at Evolve for about a year now, and we had, over the course of the year, been trading crypto to a bit of an extent, and I had been finishing off my honors in business strategy and innovation at Stellenbosch. And also, Jason spoke about the money blind spot. Having done a BCom, also never spoke about it. But then big focus on mine was also innovation. And all of a sudden, and specifically in my honors year, I was focusing on business models as my thesis. And, all of a sudden, this world opened where people can create businesses and anything they really wanted on the internet, which was quite a radical kind of idea at the time, but it really drew me in. It was quite an exciting new space, and I think I wasn't quite sure where I wanted to pivot with my life at that point, and landed in the crypto sphere. And literally since then we haven't looked back at. It's been an awesome experience so far. Jason and myself have been, as you say, crypto native, full-time crypto now for over 4 years almost. And And yeah, that led us essentially to the founding of Etherbridge. And yeah, it's been quite a journey. Jason, I don't know if you want to touch a bit on actually what Etherbridge is and what we're doing here.
Yeah. So Etherbridge is really the digital asset specialist within a bigger group called Lgor Capital. Lgor Capital is a Mauritian-based investment manager, and we run our funds out of the Cayman Islands. And when we met up with the guys from Lgor, it just became this perfect combination of individuals, right? Lgor had set out to use technology to deliver financial products, but the biggest problem that they had was that they still had to sort of interoperate. They still had to work with the traditional legacy finance system. And we met them. They'd already been involved in crypto in many ways, but we met them and became their digital asset specialists. And we continue now on this journey of not only investing in new innovative technology, but also constantly, as the technology risks around using things like a blockchain come down, starting to deliver financial products using these new and exciting technologies. So at Lgor, we are crypto asset focused. The Lgor group in general is fourth industrial revolution focused. So it's a really future focused company. We think that we've got a pretty good handle on what the world is going to look like and where the world's going to go, and couldn't be more excited for the next couple of years with Lgor and Etherbridge.
Yeah, I like how you mentioned the money blind spot, and I'll come back to that in a sec. Before we move off Etherbridge, though, the one thing that got my attention was you guys do a very nice newsletter. I've been subscribed to it ever since I met the two of you at Blockchain Africa, I think roughly a year ago, early in 2020. For viewers that would like to subscribe to the newsletter, you cover the latest crypto topics. You've got some key indicators to look out for. You talk about DeFi. How does one get into that?
Mark, you want to?
So probably the easiest way is actually just go onto our website, etherbridge.co.co, not .com or .co.za.
Yeah.
.co, and you'll find very easy at the bottom there. You can subscribe to our email, and then you'll automatically receive it. We send it out every Saturday morning. And we've just really tried to lower the barriers of understanding this new industry. It can be very complicated, and I think just like how traditional finance, a lot of people use fancy words to keep people out. We have seen that in the crypto space, and so we are really just trying to make it a lot more understandable, more digestible, and short reads for a Saturday that will just really help you understand the space and really come to grips with the tech and how we see the future unfolding. As Jason said, we've got our own personal opinion, which we love sharing with everyone.
Right. So let's pivot now to Bitcoin. We'll come back to some of the things that you mentioned, right? But before we talk investing, just Bitcoin. So Bitcoin has had a phenomenal 11 plus years. And when it goes up, people are positive. When it crashes, you see a lot of FUD, a lot of negativity. They're now attacking the energy usage, which there's a lot of incorrectness that's being spread there. But I want to ask you the primary question. After more than a decade, is Bitcoin still relevant to the world? Do you still see Bitcoin leading us into this new future?
Yeah. So I think, first of all, there was a lot of work that went into Bitcoin before Bitcoin was birthed, right? So there was at least 30 years of projects that led up to this innovation, right? It wasn't just a fluke. It wasn't just magic internet money. There was a build up to solving the problem of having trustless peer-to-peer money. So is Bitcoin relevant in today's world? Well, we got to answer the question, well, what is Bitcoin? So at Etherbridge, we view Bitcoin as an apolitical monetary system, right? It is a settlement system at its most basic. You can, when thinking about settlement systems, and this is another fascinating thing, as we said, money and financial plumbing are the biggest blind spots, right? Ask most of the financial world if they've ever heard of Fedwire, if they've ever heard of Target, if they've ever heard of CHAPS, if they've ever heard of SAMOS. Okay, these are settlement systems in different jurisdictions. FedWire in the US, Target in the Eurozone, SAMOS here in South Africa. Now, financial institutions, financial professionals interact with these networks every single day of their lives. This is why in your textbooks it tells you that certain transactions are T plus X, Y, Z, right? Yet no one really questions them, no one really understands them, and 90% of people actually don't know that they are interacting with them, right? They're like air. They are a given to the financial world, not something that they question. Now, Bitcoin is very similar to FedWire, Target, CHAPS, and SAMOS in that it is a real-time gross settlement system. And that's really the network of Bitcoin. Bitcoin is the first settlement system that can reach an agreement on who owns what and how much of it they own without the need of any central coordinating entity. So is Bitcoin relevant in today's world as a network? Absolutely. Bitcoin will, we often like to refer to the Bitcoin network as a network for enemies, right? The Bitcoin network is a settlement system that Russia and America can use to transact value, and they can trust that that value is being transacted in an appropriate way, and that both parties will get the outcome that they both wanted. Now, the second aspect to the question, and this is really where the hype, a lot of the FUD, as you were saying, is focused on, and that is Bitcoin the asset. Okay, so Bitcoin the asset is a non-discretionary monetary asset. Okay, now this is mind-boggling in a world of monetary discretion. So our current monetary systems have discretion over their monetary policy mandates, right? At the whim of a finger, someone can increase or decrease the amount of available supply of money. And Bitcoin is different to this in that it's unlike any form of money that has come before it. It's very similar to market-selected forms of money that have come before it, like gold. And what makes it special is that its supply, at least, is impervious to changes in its demand. So in a world that is no longer linear, that is now becoming exponential, not just in the rate of technology adoption and usage and disruption that we're seeing all over the place, but also in terms of monetary policy. I mean, monetary policy is becoming exponential. I think since 2008, there was about 75% of all existing US dollars came into existence, right? So you have two monetary experiments, and the question of relevance is just, one is backed by a very small group of human beings who make decisions, and the other one relies on mathematics and computer science in order to facilitate the good that is money, right? Money is a good in society, and I'm sure that we'll touch on this a little bit later. So is Bitcoin relevant in today's society? Absolutely. I mean, Tavesh, actually, it's interesting that, we actually met on, I'm not going to be able to get the day right, but if I remember correctly, we were sitting at Blockchain Africa, and I think Bitcoin was down 40% on the day. And we're here today talking about its relevance. So it will continue to be relevant. I like to call it the independent variable. And yeah, Mike, I don't know if you want to add to that.
Yeah, I think you've touched on that exceptionally well. I think Bitcoin is more relevant today than it ever has been in the past. People are starting to ask questions of the current financial system that they haven't had to ask before, and it is undergoing its biggest stress test probably since we went off the gold standard. And we're going to have to pivot in some way or another. We have a lot of other words thrown around like modern monetary theory and different approaches, but whether they work still remains to be seen or even implemented. But yeah, so I think that really says that Bitcoin is just a general discussion around money right now has never been more relevant.
Yeah, I really like what you said. Network for enemies. For me, that's something that we never had. We had the SWIFT system, but that could have been shut down with sanctions onto a specific country. Now I'll get back onto the money supply aspects that you touched upon. when we talk Austrian economics. But I just want to cover one more aspect about Bitcoin. So many people will then say to you, okay, so this is a great network. It's doing things that we never had before, thanks to the technology, the blockchain, the trustless nature of it. However, I'm not convinced, for argument's sake, that it might be a good investment because of all the FUD that we're hearing. Now, I want to do a quick rapid fire. I think this will be very useful to investors who could have been investing for 50 years. You know, the gold guys, the guys in the foreign stock exchanges, okay, the guys who buy property. Let's do a quick fire dispelling of some of the FUD we're seeing. So what we've seen recently is it uses too much energy. It's using dirty energy. It's not backed by anything. It can't be used as a unit of account. I mean, those are the 3 or 4 that we normally get. And these are actually very simple and very easy to dispel. I'll give you guys the honor since you're my guests.
Awesome. So let's start on the energy piece. All right. So first of all, people who say that the amount of energy that's being put into Bitcoin, or the people that say that it is excessive, clearly don't see a need in the world for a non-state, apolitical, non-discretionary form of money. Right. If you think that that is something that's important in society, then the energy consumption is not. It's warranted. It's a similar argument to, you know, we used to run around on horse carriages, right? And we upgraded to cars, and they needed more energy. We were moving forward. We were innovating, and we were moving forward to something better. And I think the situation is the same with Bitcoin. In terms of the renewable side of Bitcoin, and a lot of those conversations around there, I don't think it's worth getting into like exact percentages of how much is this miner working, how much is that miner working, but rather focusing on the game theory of what's about to play out, right? So answer this for me. Would a bank become more profitable by utilizing renewable means of energy production? Would that affect their bottom line? Would that make them more profitable?
Not necessarily.
Not necessarily, right? Bitcoin miners, okay, run specialized hardware and expend electricity in order to earn the right to process, execute, and settle transactions on this apolitical, non-discretionary monetary system. As a reward for that, they earn Bitcoin, and their expenses are denominated in fiat currencies, which means that they are constantly selling Bitcoin to recover their fiat expenditure. The simplest and easiest path to scale a mining operation, or to, in fact, just run a successful mining operation is, like every other business, reduce your cost basis and increase your margins. One of the easiest ways that Bitcoin miners can do so there is this natural incentive to do so, to go towards renewables, is to utilize cheap renewables, is to move to places where energy wasn't able to be produced before because it was too far from a settlement, and now make it profitable.
Yeah.
There is a clear incentive for miners to use more renewables. I was actually, I can't remember who it was that was saying it. I think it was one of the guys from Asari, and they were just talking to the point that if you think about the crypto asset market, or just Bitcoin, the Bitcoin market, and you think about some of the biggest players in the game, right? The Coinbases, the Galaxy Digital, the Digital Currency Group, and you look at where their revenues are coming from. Okay, their revenues are coming from ancillary services around the Bitcoin network. So another play that we could see happening with time is companies like Coinbase and the rest of them. Some of them already have mining operations, whether they be small or relatively large. We could see them joining the sort of Bitcoin mining, business, and running it at break even in order to continue powering their core businesses. Right? These are things that we could see playing out. So my only thing that I want people to sort of take away from the energy argument of Bitcoin is stop looking at the ball for what it is. and start looking at where the ball is going. There are clear incentives. I mean, I'm going to use Charlie Munger here, a guy that hates Bitcoin. Show me the incentive and I'll show you the outcome. Here's the incentive. Go use cheaper energy and you'll be more profitable as a miner. If you're a bank or you're a central bank, go use cheaper energy and you can just feel good for yourself. You won't increase margins.
I'll just add to what you're saying there. So I posted the other day on LinkedIn. I'm not sure if you guys saw it. Kevin Turner was the ex-COO of Microsoft globally. So this is a guy that I knew, and I even met him once. And he started now a company to drive clean energy in the US. And his biggest business is Bitcoin mining. And he was actually saying, he went on to Bloomberg and he said, because of the value of Bitcoin, the future potential, not only is it moving to clean mining, it's driving the sector. It's enabling innovation in this sector. And it also comes back very quickly to another knock in that it's backed by nothing. Michael Saylor says, look, just like gold, you spend energy to extract gold. That is the base cost then of what it's worth. And it's a similar argument to Bitcoin. Because you're spending energy ultimately to mine it, there's your base cost. So people that say it's worth nothing, we obviously don't agree with them, right? But before we move on to the economics discussion, I mean, between yourself, Michael, is there any other FUD that we've seen recently that you guys want to quickly dispel, especially for those potential investors that are still new to Bitcoin and blockchain?
Well, I think we've touched on the mining side of things, and I think do say within, as Jason myself say, within the media, they can't really decide on the narrative they're trying to kind of push, whether Bitcoin is outright banning it or whether Bitcoin actually owns too much of it. They seem to hop between the two on a daily basis, and it's quite interesting. I mean, just as an example, I know we're still on the mining, but the other day, all the headlines we saw were Bitcoin or China bans Bitcoin mining. And this was just the other day, and everyone, those are all the big news headlines. But actually, what they'd done was ban Bitcoin mining in places where the majority of their power is created using coal. I mean, if that's not a movement towards greener Bitcoin than it was previously, I don't quite know. So like the rhetoric all these guys keep on spinning seems to change. I know Kathy Wood in her latest consensus thing says the biggest hindrance now that she's found is this ESG movement. So I think once that has really sorted itself out and people realize that Bitcoin mining, well, it's probably one of our best chances at creating, or as you said, pushing forward a global renewable energy sector, the attitude might change very quickly. I mean, what's other that it's too volatile. We can get started on that conversation about, well, Bitcoin maybe is actual true volatility as opposed to the suppressed volatility we're seeing in traditional financial markets, because central banks, with a hot or a cold switch decide, we're going to quickly heat the economy up a bit.
Well, it's unregulated, isn't it? It's unregulated, so there will be volatility. I think the volatility is just getting less and less over time. I'm not sure if
I think like everyone thinks that volatility is this like ugly word, right? Like volatility is not an ugly word unless it's being suppressed. Okay, so you want to talk about bad volatility? Bad volatility is the 2008 financial crisis, where people were buying things that should have, through truth signals in the market, okay, which is called volatility, should have shown a lot more volatility. However, through manipulation, through intermediaries that made disclosures that weren't necessarily true, you suppressed volatility, and that resulted in a despicable event. People lost their homes, people lost their jobs. Okay, Bitcoin's volatility, I've never quite understood this argument against Bitcoin, and we're going to get onto the evolution of money soon, but like Bitcoin pays you for volatility. Right, volatility is only bad if you're not being paid for your volatility, right? It's like things that are new and exciting are obviously going to have ups and downs. But if you're getting paid for those ups and downs, and this is data, this doesn't lie, which Bitcoin does pay you for, then it's not an ugly word. Then it's something that you should be excited about. I wanted to just touch on one more piece of FUD and just like clear the air on this whole decentralization conversation, right? One of the big arguments that came out was once again an Elon Musk tweet on the space was, oh, Bitcoin is centralized and 65% of hash power comes out of China and all the rest of it. I think like there are, first of all, there are degrees to centralization, and then secondly, there are different aspects of Bitcoin that are decentralized, right? The most important aspect, and the people that are truly in control of the Bitcoin network, are people who keep a full node, right? Those who keep a full track record of every single transaction that has occurred, all the inputs that have led to the current outputs, they are the ones who are in control of the Bitcoin network, right? Decentralization at the node level, at who's keeping a full copy of the Bitcoin ledger, that's where it really matters. So, you know, these conversations can become very binary. Oh, this is decentralized. Oh, that, you know, this is centralized. Well, it's not that simple, right? It really just isn't that simple. There are multiple facets of Bitcoin that are decentralized to either more of an extent or less of an extent. But at the end of the day, even if someone were to control 51% in one particular jurisdiction, what could they really do? Yes, they could stop people's transactions from getting confirmations. Could they spend other people's money? No. Could they reverse other people's transactions? No. Could they themselves could potentially double spend? Yes. But once again, the game theory around that, you know, why would you want to double spend in something that you hold lots of? You know, you would destroy the value proposition of the network. So the game theory around it just stuck. Good job. That's the last sort of piece of FUD.
Do you recommend the average enthusiast running a node?
Absolutely. Once you run a node, it clicks in your brain. Okay, imagine every bank could run their own settlement node, right? Imagine if every single human being could run their own settlement node. I don't have to actually even trust Bitcoin, because I can turn to my node that sits on another computer, and every single day I can check, do I have the wealth that I think I have? Do I have, you know, is Bitcoin supply what its codified issuance schedule said it to be? Are blocks being sort of created on time or too fast or too slow? I can verify all of this from the comfort of my bedroom in my pajamas.
Yeah.
Running a full node is so it's one of the core things here, right? It's what makes this so special. So yes, I would say everyone that enters this space should do themselves the service of running a full node and realizing the true power of what they have on their computers.
Yeah. So I think we've dispelled quite a few of the usual attacks that we see in the media and by uninformed people or by people who have some kind of anti-Bitcoin agenda. You never really know. Let's just talk before we move on to the economic argument. Let's just talk about investing in this as an asset. And has the story now shifted to store of value? And for the guys that have been decades into the gold business, and we're sitting in South Africa, which is a gold country, right? Historically, why look at Bitcoin, and what are the advantages over gold?
Cool. Cool. Mike, do you mind if I take this? This is
you do this one. This is your favorite topic.
My favorite sort of topics. So I'm gonna like go around a bit, right? So no one alive today has witnessed the rise of a market selected form of money, right? No one alive today. Okay, gold was probably our last sort of example. And market selected forms of money historically have always been commodities. And those commodities, you know, whether they're successful or not, has a lot to do with people's perceptions over their scarcity. Okay, so when a new commodity is found that has sort of characteristics that make for good money, being the money can be fungible, it can be divisible, it can be durable, it can be scarce, and easy to verify. I think easy to verify was quite a big one. As technology that has these properties, right, it really needs to serve two core functions. Okay, the first core function is it needs to be a medium of exchange across space. All right, well, Bitcoin, and compared to gold, you can, with just an internet connection, anywhere in the world, send money and it will reach its final destination and reach final settlement in that destination within 60 minutes. Okay, this is just not possible with gold, right? Gold struggles on divisibility. In fact, like I would say that fiat as monetary technology was superior to gold in that it was more divisible, and that was probably one of the bigger driving forces for gold. The second and the most important part, and this is where Bitcoin completely obliterates the argument for gold, right, is money as technology needs to be able to store value across time. Now, gold is a brilliant example of this, right? The commodities that have been able to do this the best historically have been ones who, through sort of nature and production limitations, you can't rapidly increase their supply, right? So gold, as an example, every year gold miners mine, they increase the total gold stock by about 1.5%. If there was a massive demand shock and people really needed gold, right, like a liquidity event, miners would have this incentive to increase their productive capabilities. They would do so, but they would only be able to inflate gold by about 3%, right? Not a massive dilution event when compared to the 75% of new issuance we've just seen in the United States. Bitcoin, however, is actually designed to be superior to this, okay? And this wasn't just a fluke. It's actually a design feature called the difficulty adjustment. And from a high level, what the difficulty adjustment does is it makes Bitcoin supply impervious to changes in demand. So for this to make a little bit of sense, every 10 minutes, a new Bitcoin block should be formed, right? So miners run a very complicated mathematical problem. They solve for that problem, and then they can take transactions, order them into a block, and propagate them to a network. Bitcoin is actually superior in this sense in that its supply is completely impervious to changes in its demand, right? And this isn't a fluke. This is actually a design feature called the difficulty adjustment. And in order for the difficulty adjustment to make sense, we've got to actually talk a little bit about mining, right? So miners contribute hardware and energy into processing, executing, and settling transactions. What they're really doing is they are solving a very complicated mathematical equation in order to earn the right to actually propose a block to the network. Once they've solved for that equation, they then order transactions into a block and propagate that to the network. Now, the difficulty adjustment comes in where blocks are being mined either too fast or too slowly. Okay, so let's just pretend that, blocks are meant to be produced every 10 minutes, according to Satoshi's initial white paper, right? If blocks are being produced, for example, every 8 minutes, that means that the problem that miners are solving has become too easy, and Bitcoins are actually being mined faster than they should be. So Bitcoin's actually inflating faster than its predetermined codified schedule. And what happens is the difficulty adjustment actually kicks in. So that the problem that miners have to solve actually becomes more difficult, therefore offsetting the additional amount of compute power in the system. That's probably the reason why they're solving blocks too quickly. And bringing block times back to 10 minutes. Now, the amazing thing about this is that this happens in both directions. If block times go to 12 minutes, the difficulty of the problem becomes less, and eventually bringing the network back to 10-minute block times. Now, this is incredible for a form of money, right? We have never had a form of money where we can have this level of certainty around its supply. All right. I want you to, or everyone listening, to just adjust your static view of the world to an exponential view of the world, right? We have no idea of what is to come. We have no idea of how much the world is about to change in a world with IoT collecting data, blockchain storing it, and AI acting and analyzing it, right? We have no idea how this is going to change. So I would also argue that, Bitcoin's probably more apolitical than gold is. I know that gold has served quite an apolitical sort of position in economies for a while, but I don't think we can continue saying that an asset that is predominantly held by central banks is an apolitical form of money, right? I don't think it services that bull as well. So the biggest sadness, I think, for gold bulls is that you've been right on the structure of the market the whole time, right? Like gold and its place in society as a scarce store of value, you've been right the entire time. The biggest sadness going forward would be that you end up expressing your view incorrectly, right? And you don't quite realize that in the digital age, we need a digital, apolitical, non-discretionary form of money, being Bitcoin.
Don't forget, there has been price manipulation on the gold and silver markets. Silver has been heavily manipulated. The largest economy in the world, the US, banned gold. Their citizens couldn't hold gold for parts of the 20th century. And Bitcoin is immutable,
Yeah.
So
that's another incredibly important piece. We spoke about fungibility, divisibility, durability, verifiability. What we didn't touch on was censorship and seizure resistance, right? Like, flippin' gold has been taken from people many times, predominantly through violence. But a monetary system that I can store a couple words in my head, I think it makes imposing violence on me in order to take that good away from me a lot more difficult. So for me, it's a no-brainer. I do still own a little bit of gold. I would say that it's not more than 5% of my portfolio. And I've been shrinking that down since 2017. So it is on the way out. I think COVID taught us an incredible lesson. Gold should have really popped the lid, and it just didn't. I think on the margin, Bitcoin is being bought and gold is on the margin being sold. So it's
yeah. So let's pivot now, and I want to get into the economic discussion. So a lot of viewers out there will have heard, you see people tweeting it, you even see some articles, heard about Austrian economics and why Bitcoin, just by the nature of its design, its properties, really enables a different level of free market, right? Trustless, unconfiscatable, as you mentioned. But for those who aren't familiar, let's just take a step back here. What exactly are we talking about when we talk about Austrian economic theory?
Cool. I'll take this one, Jason. So, I think firstly, when you think about Austrian economics, the main core kind of resonating theme that always comes up is, as you said, free markets, less government intervention. And I think Bitcoin, as Jason has described, is an apolitical, non-discretionary form of money. There is no centrally planned party that can actually have control, which you see, I think, it's initially when Bitcoin came out, a lot of Austrian economics derided it as fiat, some form of fiat trick. A lot of them have actually come around since then and have actually agreed into the thesis that it is probably our most free form of money we've had for a very long time. And, I think when you realize that governments have never been great at long-term planning for civilizations and society in general, you can begin to see why a non-discretionary form of money is needed. You often hear people say money is the root of all evil, but money is not the root of all evil. Bad money is. If we have to go look at every single rise and fall of every civilization that has come before us, it was because of bad money. Besides obviously being conquered maybe outright by another civilization, that was pretty much the best or the most common way for them to fall. I think Ray Dalio has done a great job at going back and looking at how government intervention and extension of debt beyond, productive capabilities have never resulted in anything good for civilizations. And, I think what governments are doing now with their money printing and the intervention has been done 10,000 times before. I think Jason always says, why are we so smart all of a sudden? Why have we worked out the money problem when, in million generations before have not been able to do it? Especially, being able to expend your debts beyond your productive capabilities. And so, when it comes to Austrian economics, I think Bitcoin and blockchain in general will really allow this type of thinking to thrive. People can now coordinate on a global level without the need of a central coordinating entity. And through that, people will make better decisions. We'll be able to allocate resources more effectively. One of the considered the fathers of Austrian economics, Friedrich Hayek, he released a paper called The Use of Knowledge in Society. And that really just spoke to how open, free, capitalist markets are, over the long run, will always beat socialist, communist markets because there's more efficient allocation of capital. With when as I say, with this piece that Friedrich wrote, he explained how by utilizing every single individual's knowledge of a market, of society, you can actually create better societies and allocate resources a lot more effectively, which results in much longer term prosperity for everyone else. I think when there's no private ownership in something like a communist or socialist society, there's no markets for means of production. How do you inquire with the market what is the best way to make a stool? I'm sure some guy tried to make it with 2 to begin with, then 3, and then 4, and then realized stabilizing it underneath was quite efficient. And it was only through this process of being able to create something, put it out into the economy or in the market, and people give you a reply, and that's either your thing selling or it's not. When you now go into a centrally controlled market that is controlled to an extent, you now start actually hiding truth within a market, and it becomes very hard for people to actually create something and allocate resources effectively. In a centralized entity or in a centralized party through communism, how do you know that you should be looking at a better way to make a toothbrush or whatever else it is? You know what I mean? It's only the free markets that can actually decide these things.
So what are the basic tenets? We're talking free market, as less government control as possible.
Hard money.
So we're not printing like what's your view on this printing that we've seen in the last year, by the way, especially with the Americans? Any comment?
It's
Jason's got one.
No, it was to be expected. I don't think that it should be a big shock, and I think like what's to come shouldn't be a big shock either. If you think that a lot of money is just being printed, just wait to see what's coming, right? They haven't even gotten started yet. Okay, they really haven't even gotten started. So when rates at 0 and you have no real lever in interest rates, the only real option that you have is extending the money supplies, is trying to just throw cash at problems. And I want to go like back into that Austrian thing, right? So like one of the biggest tenets is as little government intervention as possible. Now, we know that Austrian economics is right. And how do we know that it's right? Well, we live in a deflationary world, right? However, what is not deflationary? Okay, so we'll start again. We live in a massive technological revolution. We just had the internet, and now we're about to go through these other fourth industrial revolution technologies. Everything around us is getting cheaper. My question to anyone watching this is answering these questions, right? Why is education not getting cheaper? Why is why is medicine not getting cheaper? Why is anything that governments touch not getting cheaper? Okay. The reason it's not getting cheaper is because they're not allowing it to innovate. They're not allowing people to move to the next level, right? So government intervention is bad for that reason. Government intervention in money is even worse, right? So like, I love what Mike was saying, like entrepreneurs prod the market, right? So they make something, they put it out into the market, and then whether people buy it or not determines its success, right? And money is the unit of account that allows us to get accurate sort of price signals in the system. Okay, so if you start distorting that unit of account, right? If there is one person on this planet who has a godlike ability to change that unit of account, you start sort of perverting everything around us. Okay, you want to know why your microwave that you bought a year ago broke? You want to know why all the goods that you buy are just break easier? Well, first of all, they're not built to last. Secondly, they've been perverted by inflation, right? So let's think about it from the perspective of being an entrepreneur, okay? An entrepreneur on a hard money standard has to solve one problem and one problem only. How can I best service any given need or want? Okay, that is the problem that they need to solve. Therefore, their entire cognitive focus is purely on solving that problem, trying to create the best way to do X, Y, Z, and essentially trying to establish truth, right? Trying to find truth. Once we find truth, we move on to the next thing. What does inflation do to that, and how does it pervert that? Well, if I'm an entrepreneur and my inputs are constantly being adjusted upwards, I, as an entrepreneur, have a decision to make. Either I'm going to try and convince my consumers to bear the brunt of me increasing my prices to make up for the increase in my inputs, or I'm going to do the easier option, and that would be to start using inferior goods in the production of whatever I'm doing, right? So inflation is perversive, it is coercive, it changes human beings. It doesn't just affect us in a financial sense, it perverts entrepreneurs who are trying to establish truth in the market, right, by solving a need or want. In fact, even when we talk about economics in general, I'm not an economist. I did a couple of economic modules, I guess, but I prefer to take the conversation to freedom versus slavery, right? And like, I hope that this makes sense in the context of what money is, right? So let's get rid of, are we Austrian economics? Are we fiat economists? And just go back to, how do we create money that promotes freedom, right? So what is freedom? Well, freedom is not being wealthy, right? A lot of people can feel free by not being wealthy. So it's not a monetary thing. Freedom is the ability to have exclusive rights or claims to the fruits of your own labor, okay? So essentially a system that promotes freedom promotes people owning their time, their work, and their effort, and their sacrifices, okay? So what is slavery? Well, slavery is the complete opposite of what I've just described as freedom, right? It is people who do not own their time, do not own their work, do not own their effort, okay? So if you think about money in this context, 90% of people exchange their time for money, okay? And we have these institutions called governments, and governments and central banks were charged with the job of sort of facilitating our money. I think that with time, things have become very distorted, but I still think people in central banks and governments are good people. I just think that the seat that they sit in and the role that they have to serve is where the distortion lies.
Yeah.
So, like, the promise that they are meant to deliver to their citizens is that your work, time, effort, and sacrifice will be redeemable in the future for a similar level or a similar amount of work, time, effort, and sacrifice. And if we are clever and we increase our productivity as a society, your work, time, and effort that you gave away 30 years ago should buy you more in the future. Okay. Now, the big kicker to this, because most people would just turn around and say, well, Jason, my work time and effort did buy me more. I went and invested in the stock market. I went and bought property. I went and did all these kinds of things. Well, that is a form of money that can only preserve purchasing power if you take risk. Okay, so going back to the economic argument, the best form of money is one that can preserve that relationship between your present self and your future self without taking on risk. Okay, without having to put that money to work. So, I would challenge people to think of what is the difference in today's society to a story I'm going to tell about ancient Africa, right? So in ancient Africa, we used to use agri beads. Okay, agri beads were glass beads. And Europeans arrived on African shores and they saw that we used glass beads to store our time, work, and effort, right? Money is a tool for storing time, and it is a claim on further human time. And they saw this and they were like, jeepers, we can go back to Europe and we can make these for next to nothing, right? We've got the technology to do so. So they go back to Europe, they make them, and now they come back to Africa and they start buying goods and services with counterfeit agri beads. It got so bad that they eventually were buying slaves with agri beads, okay? Because people were so blinded by, like we said, the blind spot that is money. It's just something that is there. They never question what it is. They were so blinded by agri beads' role in their society that they just assumed that it would be trustworthy and it would continue being trustworthy.
Can I interrupt you there, right?
Yeah.
So basically, they were making these beads that didn't have the necessary work and effort to produce them. So there was no energy and work locked in. This is why proof of work for Bitcoin is important. Am I right in saying that?
Yeah. So this is where the big caveat comes, right? When it comes to market selected forms of money, right? We find something, it's a collectible, right? We collect it for its perceived rarity and scarcity. The key word, perceived rarity and scarcity. Okay. As time goes on, that form of money, this new good that we use to exchange time, work, and effort, goes through these gut punches. Okay. Is it actually scarce? Boom, boom, boom. So agri beads at that point in time were scarce within that small geographical area. There was no technology that could be used to rapidly increase their supply. What they didn't realize is that their perception over its scarcity, their perception that no one can just easily produce this. That is why they chose it as money initially, because they realized, listen, like this isn't something that we can easily just create. We can't just expand, like this doesn't come out of nowhere. What they didn't realize is that there was technology somewhere else. So the perception over something scarcity as a market selected form of money is often its biggest Achilles heel or biggest strength, right? And that's where Bitcoin becomes a little bit different, right? In that, like, we have incredibly high degrees of certainty around Bitcoin scarcity. That is not something that we can get gut punched on later down the line. That is why, as a market selected form of money, it's probably one of the greatest. And yes, like having to expend resources in order to increase the supply of the very thing that people use to exchange their time makes sense, right? Like, who can increase the available amount of time? And if people could, would time be more or less valuable? Okay, if I turned to you today and said, listen, you're going to live forever, how would you live your life? Can you imagine the distortion, the perversion, the coercion that would create over your actions going forward? Right? You wouldn't think about your actions quite like you think about them now. The best forms of money have always been closely resembling time, our most finite resource.
So I'd like to challenge you guys on one thing. I'm going to play devil's advocate. It's not that I believe this, but just for the benefit of the viewer who is still a bit new to this, right? So we envision a world where Bitcoin could potentially become a global standard reserve currency. There was talk last year of a new Bretton Woods reset, and we know the failures and what happened in the 20th century with Bretton Woods gold-backed dollar, then the dollar moving off gold, and how we've had then inflation ever since. Firstly, there's two questions. Why would governments go along with this and give up an element of control, and central banks? And secondly, what would be negative consequences if we do move to a Bitcoin standard where globally it's the unit of account? Everybody trusts it. As you mentioned, it's a network for enemies. I really like that. But, for smaller nations, do you even see some smaller nations just not even having a currency like city-states and just going onto a Bitcoin standard? What's your view on the future, if Bitcoin really is what we think it is, for the capitalist system and for the global macroeconomic environment?
I think a lot of work needs to be done on what that transition looks like. I don't think that transition happens very, I don't think it's like an overnight thing, but I think that there's a lot of work that needs to be done on it. There are men like Jeff Booth. He wrote the Price of Tomorrow. He's doing a lot of work with people trying to sort of understand what this transition looks like. In terms of, would governments allow it? I think it folds back into the impose violence on me and I will leave. Okay, like the one thing that, like, I don't think governments have quite understood about Bitcoin now is that we have opt-in economics now, right? You no longer have to just be in the default. Okay, you can opt in and opt out of your own monetary system, right? Like, whether governments like it or not, they can force me to pay for my taxes in fiat. They can force me to pay for my obligations in fiat, but they certainly can't force me to value that money, right? These economic laws that talk to this, Gresham's law talks to, good money driving out bad money. So people who choose to spend in fiat and choose to save in Bitcoin. I think Bitcoin becomes almost like the new bond. I think where all of this unravels is that, and this is a question no fiat economist can answer to me, right? Like, how does fiat financial engineering or Keynesian thinking, or even modern monetary type thinking, how does that, how do you keep doing what you're doing without constantly centralizing power? Okay, and like, how far can you take it? Like, is America going to take it as far as Japan has taken it? I think the Japanese central bank owns something like 70% of their equity ETF market. Okay, it's going to get to a stage where nation states are going to become the biggest. I mean, I think they're already the biggest players, but they are going to be the biggest buyers of assets in the world, right? Every time a central bank buys an MBS or buys a line item on some bank's balance sheet, or specifically mortgages, they're buying property, right? They're propping up markets. They cannot keep doing what they're doing without constantly centralizing power. So we're either going to keep going the same way that we're going, and we're going to get to some kind of blow up event, right, where there's literally like Huns running over the hill type thing. I'm talking like proper revolution kind of thing. You can't have wealth inequality like we have going on and on and on and on and on and on and on forever. Eventually, they will point a finger, right? They will point a finger at the very people who have benefited from the engineering of our current financial system, right? Our current financial system benefits those who own assets and punishes those who provide their time and work for money. So I don't think that the transition is fast. I would say that Bitcoiners and the rest have a lot of work to do on that front. But I would also go as far as saying, like, what sane individual would want to store their wealth, 100% of their wealth, in any currency other than the US dollar, the pound, the euro, the Swiss franc, and maybe the yen, right? Those are 5 currencies, and they make up 15% of the world's population. So what I'm trying to say is that 85% of the world's population doesn't want to store their wealth in their local fiat currency. We don't need America for Bitcoin to be great. It's just America and their founding principles, their principles of freedom. Bitcoiners are like America in their early sort of after their revolutions.
1776, basically.
Yeah. It's a new digital bill of rights, right? Bitcoin is a social contract in on the internet.
But then can I ask you then, what about CDBCs? Now, initially they didn't want to talk. I see you smiling. They didn't want to talk about CDBCs. In recent months, I've been attending IMF and World Economic Forum webinars, and I see there's now a shift. Are they only talking CDBCs because they don't know how else to fight Bitcoin, or are they serious? And if they do roll out CDBCs on a grand scale, why would the Joe average opt for Bitcoin when he's got a CDBC backed by his government?
So, Mike, you can start it off, but I've definitely got a couple things to add.
I know Jason. I know Jason will add a bit here, but what I just wanted to say, and what was speaking to Jason earlier was, at the end of the day, these are going to be opt-in economies. You're going to be able to choose the type of money you want. I think there are very, very limited examples that we can point to throughout history where the world has essentially decided that there's one form of money. There are usually a couple hundred, even as a reserve currency going on at a time. So for Bitcoin to be adopted as a world global reserve currency remains to be seen. It probably will be the first time it's ever happened in human history. And you find a lot of different countries obviously have very different ideals. A Bitcoin in America are probably more related to a Bitcoin in China. China does impose control on their citizens, and to give them the power of Bitcoin might be, it'll be an interesting to see actually what happens there. And so with their launch of their central bank, I think they're probably furthest in their pilot compared to any other nation. I think they're even trying it out in some of their tech hubs at the moment, which has been quite successful according to them. But I think there's going to be a point where governments will try to keep control, because with free money there's a lot less ways to control a populace, so they will try to push out central bank digital currencies, and to do it in any other form besides on blockchain would just be dumb. To be honest, there's no ways they could compete with Bitcoin without having their own currencies on a blockchain. And I think at the end of the day, what people will ask is, well, who are we trusting again? Why are we trusting these governments? They've already gone and, abused the trust based in them once, and that's the current fiat standard. You just because you're changing the type of money or the way it's delivered doesn't change the discretion around the decisions you can make with it.
Yeah.
And people will naturally gravitate and save specifically in the hardest form of money there is. And people might spend the central banks, and to be honest, we're probably going to see a blend of all these monies going forward, but very efficient at the same time. On rails and on ramps between everything will become very, very easy. Interoperability, just like how the internet was a whole bunch of siloed, essentially data centers, all became interoperable with one another with their protocols that they had in place, TP/IP, and a lot of blockchains will probably it'll happen just like that. They will be interoperable and they will coexist. But from my perspective as to why would people trust governments again, especially if they've seen the abuse? Not many people get to see the abuse go on twice in their lifetime. They'll ask questions as to why should I even trust the government again with currencies? I'm sure Jason might even explain some of the dangers with central bank digital currency.
I just think that the idea is ludicrous, right? Like money has been digital for a very long time. Okay, like implementing a CBDC would be absolutely destructive for commercial banking, right? Like that will be number one. Number two, it doesn't, like Mike was saying, it doesn't solve central banks' discretion around money supply, right? It doesn't solve the fact that in terms of real yield, and we didn't really get on the inflation conversation, but if you look at asset price inflation and you start thinking about what your real yield is on treasury bonds or even on your cash component, you are getting obliterated, right? You are, in the next 5 to 6 years, you're losing 50% of purchasing power. It's going to look a lot like the sort of 40s, 50s.
Yeah.
So CBDCs, if anything, will accelerate people into this new sort of internet of value.
Yeah. So I'm just looking at time, guys, and I think we need to start wrapping up. It's been an excellent conversation for part one, and I think I'll put up with the video some of the core concepts that you guys have introduced today. But I really like things like the money blind spot that we spoke of in the beginning. The network for enemies, which is amazing, right? What was the problem? The Byzantine generals problem that we always hear about. So let's just do a wrap up. I just want to, before doing that, CDBCs not being good for banking because I can have an account directly with my central bank. Why would I need a bank? I think is that what you're referring to?
Yeah, it's also a direct line of credit. Hey? So like when central banks produce money, they trust the transmission mechanism that is the banking system to allocate those funds appropriately, right? This will rapidly increase. You know, we all talk about UBI and modern monetary theory. These are just like the central banks signaling that they've run out of tools, right? I think that if anything, CBDCs will be really scary for the banking world because they'll no longer be trusting banks as the transmission mechanism. They will go direct to consumer.
Yeah.
In helicopter money, high velocity money type thing, which will probably spur an inflation problem, but we'll see.
Cool. So I think there's actually a lot we've uncovered that we might have to touch upon in part two. But I think this was great for an introduction, guys. I'm really excited about Etherbridge, and I really look forward to your newsletters. I'll put up on screen for the viewers where they can go and get the newsletter. Look out for it every Saturday. It's packed with a lot of information. I certainly enjoy it. And I think we touched on some good things here today. Any closing thoughts, 60 seconds before we wrap up?
Mike, you first. You first, man.
I think from going back to your first question, is Bitcoin relevant? I think, as I said, it is more relevant now than it's ever been before. And I think people really need to start looking. They need to start seeing. They need to start understanding what is going on around them. For a long time now, governments have been abusing our trusts, and Bitcoin is a way to opt out. It's a way to peacefully turn around and say, well, you know what? This is how I'm voicing my support. I don't want to support your system. I can actually go choose an alternative one where I can, facilitate my day-to-day living. And I think that's what it is. It was Nick Carter who deemed it or called it a peaceful revolution. I think that's really what it is at the end of the day. It's our first time being able to turn around and turn against the powers be and actually, be independent and truly free for the first time in a very long time.
Yeah. I think I would like to end on a comment from Ross Stevens from Stone Ridge and NIDIG. He talks to this Darwinian-like propulsion of human beings towards something that will be able to store their energy better, right? We spoke a lot today about money and time, okay? Money is energy, and we need to be able to store it over long periods of time. And I think that Bitcoin is, at the moment, the best vehicle for doing so. And like Mike said, more relevant today than ever before. So I'm excited for future chats, Tavish. Very excited to keep chatting.
Thanks for that, guys. Really appreciate your time, and I'm 100% sure the viewers enjoyed this. Just before we drop off, we can get hold of you guys on LinkedIn. Are you guys on Twitter?
Yes.
We'll drop your handles, send them to me, and I'll put them up on screen. So I'm sure you've won a whole bunch of new fans with our conversation today. So if you see your Twitter followers going up, I'll actually ride your wave, and I'll put mine there as well. Why not, right? So guys, I really hope you enjoyed that. Really, we've scratched the surface, and this is part one. We're going to be doing a series with Etherbridge. It's an exciting new company. Look out for the newsletter. But for now, I really hope you enjoyed that, and we'll see you very soon for part two. Be on the lookout for that. Have a good evening.
Cheers, guys.